Welcome back to this special chat with Pankaj Vaish, Managing Director and Head of Global Emerging Markets at Citi. Pankaj, okay, you've been a long time India watcher, and though I know that now your responsibility is not Indian equities, what's the FII view? What is the foreign view? Is there a feeling that India can be an outperforming equity market here on?
Yeah, so actually I'll tell you, with this election, there was a lot of excitement. And if you leave all the intellectuals on one side who've been writing a lot of negative stories, among the investor community, there was a lot of excitement. And definitely equities was the asset class that they all recognize as the easiest one. Some people talked about FX and rates, but in rates there's some limited space, I think, given where we are now. But in equities, people were pretty excited. They are choosing, I think, the sectors a little bit, so not so much mid-cap, but it's a lot just the big names. Even banking has come back pretty strong. So there are a lot of people who are very positive about it. And you tell them the growth story or jobs or whatever, and their view is, look, fresh mandate, 5 years to go, and frankly, what else do I have? This looks like a strong mandate, and I'm happy to put some money behind this.
Okay, but what would you want to watch out, say, from the budget, to go back and tell investors to continue?
I will tell you, Latha, I was not following India very closely, but one of the reasons why I'm on a visit here is because I've spent time with my colleagues, and I was very, very concerned about all these articles I've been reading about the job situation, and so I was trying to make sense out of it. At first blush, it makes no sense. You cannot have real GDP rising at 7-8% over the last 15 years, let's say 7%, and say that unemployment is at 45-year high. It just doesn't make sense. It's not like our productivity is growing at 12-15%, right? And frankly, one of the stories in Mint today was talking about urban male unemployment is at 27%. I mean, that would call for riots on the streets. And I don't see any. So something doesn't make sense to me. So they explained to me sample change and all of that. But I think this picture has to be clarified. I think there has to be a very clear paper or something from the Labor Ministry, Finance Ministry, explaining to the global community what's the employment situation. I think clearly there are a lot of caveats in this, and I think they should explain that there is some meaningful upgrade in employment, in education versus 40 years ago. There's a lot of sociological reasons why women participation rate. I think they need to explain all of this properly. But if there isn't
a cloud over the GDP data as well?
There is now. I think there is, because again, things are not jibing. And there was something Sameeran, our economist, was explaining to me about GVO versus GVA, and so again, acronyms not everybody around the world knows, and I didn't until this morning. But I think some of this should be clarified. I would say most investors around the world are extremely excited about this repeat victory. This is a social revolution. This is no less than 90 million fresh voters saying, we don't care about the old frameworks you used to give us. We're voting for hope and optimism. And now it is extremely important for the government to just talk about jobs, jobs, jobs. I think it is extremely important. Hopefully the new finance minister, she is a very focused person, energetic person, that there will be a lot of attention paid to how to improve jobs over the next 5 years. Because if that's not done, I think people will be deeply disappointed in a right of center party for the next many, many years.
Yes. Okay, let me just come back to your area of specialization, the global markets. Do you worry that there can be anything in the currency? How are you looking at the dollar index? And more importantly, yuan, because it seemed to go towards 7.
So I think 7 is not that big a deal. I think Mr. Zhu is right. It's a nice round number, but they may not necessarily draw a line in the sand on that, because also that tends to attract a tug of war, which is not necessary. If there is a rapid depreciation through 7 and starts running to 7, 10, 7, which, by the way, many global investors are betting on. Oh. So there's a lot of call spread buying that has taken place on dollar CNY and dollar CNH, sort of 7.25 and above. Even some 8 strikes have been bought. Oh. So just as a tail risk, things go really bad sort of a scenario. So if you start seeing a rapid depreciation of the Chinese currency, They will for sure. It's a
That's
major
not your
country.
base case.
That's not our base case. They will take action. In terms of the rupee, so the rupee is, given what has happened to CNY, given what's happened to Korean won, Taiwan dollar, rupee is obviously extremely well.
Study.
Partly because of the elections and people being excited about it. But I think given RBI's preference to keep buying the currency, this also will not like run towards low 60s or something. I think they'll just keep a bid on it. But that's all that's needed. I think as long as the currency is stable, is within a sort of, let's say, a 2 rupee spread over the whole year, then that makes the bonds carry very interesting. That makes equities a lot more stable. That's all that's needed, I think, and we look as like a clear standout in all of, not just all of Asia, but dollar South Africa rand has been weakening, dollar Brazil, dollar Mexico, among all the major currencies, they've all been weakening. And so rupee would stand out as quite a
I worry about trade deficit in that case. We don't want a strong currency. At a time when the global economy is already slowing, that can be very bad for Indian trade and trade
But
deficit.
I would say, Latha, it's been 3 years since I left India. I think the sensitivity of India's trade deficit to the rupee is not as strong as was originally thought. I think just a lot of the kinds of exports that we have now are a lot more value added and not necessarily that sensitive. But anyway.
No, I don't like a combination of high fiscal deficit and high current account deficit under any circumstances. So it's okay, maybe just bad memories. But just to come back, what's your sense about the dollar index? You know, a strong dollar index has also not been very good for EMs. How is it likely to move?
So there also, we think the dollar will stay strong.
Okay. Stay strong.
There is, in the euro, there has been a persistent bid underneath the market. Every time it gets to low 111s, you tend to see this mysterious buyer come in. And it could well be one of the big, government entities. But there is this resilience in the dollar, and you're seeing this even against some of the key emerging markets. And so the Chinese ones you can understand because of the trade war, and thus Korea, and thus Taiwan dollar. But like I said, even versus some of the Central Eastern European currencies and the African currencies and LATAM currencies, you're seeing some strength. Nothing crazy, but there is a bid in the marketplace. And any of these countries who are not helping their cause, they make it easier for the dollar longs to do that. So that's why in that sea of weak currencies, I think the Indian rupee still has good fundamentals, and people are quite happy with it.
Okay, but you don't see it going to 98, 99 dollar index, DXY?
No, I mean, we just see some gradual...
Slight bidish.
Yeah.
Okay, all right. Finally, if today you're allowed to buy some asset, which one would that be?
Actually, we're still, even at a personal level, long Indian equities.
Okay, there you are.
I think they're performing quite well. If the S&P falls 10-15%, I think that will still be a good place to go long, because ultimately I think Mr. Trump also has re-election next year, and he will not want to be sort of too stubborn about it. There is an interesting game theory thing being played that if they can be unpredictable, let's try to be unpredictable. So I think on a sell-off in S&P, that'll probably make sense also. And Mexican bonds. I think those are very good value.
All right. I liked your first answer best. No matter what, Indian equities. Pankaj, pleasure speaking with you. Thank you very much for joining us. Well, the key message is there can be a lot of red flags out there. It's possible that the trade war gets very bad. But as of now, there is always the Fed put. With the Fed cutting rates, things could still take a turn for the better. But more than that, I think the best answer from Pankaj is still Indian equities, the best place to be. Thank you very much.